But I think there's a big reason that we could see the Bank of Canada start to really ratchet things in. And that's something that we're seeing every single day right now. Mortgage renewals, I'm getting phone calls, emails, texts from people every single day right now. My mortgage renewal is coming up. I'm not really sure what to do. What are my options?
Welcome to The Flow, Real Estate and Money Show, a show focused on helping Canadians understand the different elements of real estate, mortgage, and finance. The goal of our show is to provide Canadians with the tools, information, and knowledge to have more success when it comes to their investing and real estate related decisions going forward. My name is Alex McFadyen, and I'm your host. I can't wait to get you into the flow.
Well, if y'all aren't already over the hangover of last week's podcast about the potential of Trudeau taxing our primary residence, whew, that was a doozy and got a lot of vitriol, a lot of interest, and a lot of comments. We've got more hot news for you because, as you know, coming up in just a few days, the Bank of Canada is going to make their next decision. Now, a lot of people have probably already made up their minds on what the BOC is going to do. But for those who have not made up their minds already, I think this conversation is going to be worthwhile for the listen right now. Not only will I break down to you what they might do, but if they do what we think they might do, what actually is going to happen after July. You're going to want to stick around to listen to that. So pay attention and enjoy. All right, so if you're not over it already, I can sense the heat and the energy for people out there who are stressed out about the current government and the rumors about Justin Trudeau's primary tax potential capital gains rules that come down. And we're all just hoping and praying that this isn't actually going to happen and it's not a reality. So let's switch up gears here today. We're going to talk about this. Let's talk about the BOC. Again, it's almost everywhere right now. It's basically a sport and a game to follow the news of the Bank of Canada. And it's like, as the news goes, so does the market go in so many different ways. For the last 6 to 12 months, let's put it this way. For the last 6 months, at every Bank of Canada announcement, there's a certain energy in the housing market for the 3 weeks or 4 weeks before and the week to 2 weeks after each announcement. Now, starting in January of this year, we started to really notice, well, this trend starting, which was the anticipation of potential rate drops. And if you can recall back to as early as January of 2024, well, you might not know this if you're not paying attention, but I could recall back, the market was on fire when it came to leads of pre-approvals and people reaching out. So inquiries, there were people reaching out. I want to get pre-approved. I want to get started, like to start planning. I think the market's going to start moving forward if rates get cut. Boom. And then, of course, rates didn't drop. Now, the market took off from January, February, and March. There wasn't a lot of inventory. And then all of a sudden, the Bank of Canada didn't reduce rates, and they didn't reduce rates again. And of course, for those reasons and many others, the market started to slow down in terms of price values, less sales, listings started going up, and that's continued on for the last few months until, well, guess what, June. Now, if you listen to the news and if you watch the news, you'll note that after June's first quarter point reduction, there wasn't a significant change in market conditions. And while that may be somewhat true, I can tell you, not just anecdotally, but both anecdotally from my experience and additionally speaking from a marketplace perspective, speaking to other top brokers across the country, that we saw an increase in mortgage applications for the month of June and so far in July. So it seems that it was a delayed effect. People were waiting for the quarter point. It didn't have an extreme impact on the housing market, but it had a small impact, and there was a notable impact. So the question mark is, if the Bank of Canada reduces rates here in July, a second time in a row, which historically speaking, they're very likely to do, does it have a bigger impact on the marketplace? And if so, what happens? Now, while we talk about that and what's going to happen here, I found it interesting. I ran across a couple of articles in the Financial Post. One of them was, many Canadian homeowners are delaying moving due to the high cost of living. So we are aware that higher interest rates impacts not just housing, but everything across the board. The cost of everything goes up. Inflation obviously goes up along with it. And it's definitely had an impact on people's lives, whether it be groceries, vacations, vehicles, whatever. Everything has gone up in value across the board. And in this article, it highlights that most Canadians, and there's a survey, I'll get into this, are delaying moving due to high cost of living. And here's the thing. Before I get into that, I flipped over to another article. And in this article, it said that what's more important to homebuyers, interest rates or purchase price? And there were surveys suggesting that the purchase price is still the most important factor for prospective Homebuyers, over 58%, according to these surveys. So it's kind of interesting. Homebuyers are delaying buying due to the high cost of living, which would argue that that's interest rates. But on the other side, it is the purchase price remains the most important thing. So I guess it depends on who you survey, and on any given day, it impacts their willingness or desire to buy a house. The truth of the matter is, I think that a vast majority of Canadians, regardless of what the survey says, just don't feel comfortable buying in a market where there's a certain level of uncertainty, which is why I personally believe that we haven't seen the housing market take off the way it should have. Now, we're getting off track here, so let's get back to interest rate forecasts and what's going to happen. Well, if you didn't see it, and you probably did because it was on everybody in the real estate industry's news and Instagram feeds and YouTube feeds and all over YouTube, all over the place. Well, the CPI print that came out within the last week here, the CPI news came out and it clocked in at just 2.67%, which is the lowest in 3.25 years. It's very low, and lower than what most media reports were reporting at 2.7. So that was less than expectations, which doesn't mean we're not having we're not seeing any inflation. Obviously, that means we're still seeing inflation, but it's lower than it was before. And when it's less than it was before, we can agree that that is probably a good sign for the Bank of Canada that the rate cuts, contrary to the fact that we've only cut a quarter point, the rates themselves have been working their way through the environment. And depending on who you talk to, they need to come down. There are some suggesting it should come down more than a quarter point. In fact, there have been suggestions that rates should get down to a half point. But let's just talk about what this would look like if the Bank of Canada was to cut rates on, this would be July 24th of 2024. Now, let's start off the current projections as of the date of recording this episode. This would be July 18th of 2024. As of the date of recording, the current projections are over an 88% chance, depending on where you look. In some places, 94% chance of the Bank of Canada reducing rates by at least a quarter point, and a 99% chance of the Bank of Canada reducing rates by a quarter point in September. With that in mind, I want to draw back to one thing. Earlier this year, there were many economists suggesting that higher for longer just might make sense. So it's kind of funny to note that now the projections are rates going to come down, but recently it was higher for longer. I guess it really just depends on who you talk to, because this is all nobody knows and everybody's trying to figure it out. So what happens after July? Let's say the Bank of Canada cuts rates 25 points. It's basically in the news already. It's in the news. It's rotating. You're seeing it everywhere. They're going to cut rates a quarter point. What that means is that, well, banks' prime rates are now going to be at 6.7% for most banks. Overnight rates at 4.5%. So we've seen a total half-point reduction. Obviously, it's nice news for anybody who currently has a variable rate mortgage at this point right now. They're feeling pretty good about it, but no impact on qualification. So what that means is that even though the BOC might reduce interest rates a half point or a half point in the last, month and a half, variable rates would still, for the most part, especially if it's an uninsured, so over $1 million purchase price, or refinance a 30-year mortgage, most of those variables are still over 6%. And the ones with a high ratio, so less than 20% down, an insured mortgage, you might be in the high fives. Most people are taking the lowest rate to qualify right now to get their maximum borrowing power, which still ends up being a fixed rate. 3 years, 4 years, 5 years, whatever they decide to do. Hopefully, they're not taking anything more than 3 years unless they have to. So there's no immediate impact from a qualification perspective. You're not going to be able to borrow more money. But we do have this market sentiment. Now, if I was to show you a graph, and maybe I will if you're watching YouTube, I'll try to get this on the screen here for you. A couple things to note right away. The average inflation has been following a pretty tight trend line. Like, it's been following a downward trend since the June 2022 peak, it's good news. That's what we want to see. The fight against inflation is working. It's happening. Okay. And based on the assumption that we still continue to see this, even with some potential bobbles up and down, then you would expect that even with rates coming down, that trend line will continue to get us into our target territory that we're trying to get to. Another interesting fact with this news, not if, but with this news, the markets themselves are now expecting another 200 basis points. That's 2% of BOC cuts from here. Just a week ago, so just before this announcement, the projections were 1.75%. That's 175 basis points. What? So now we're at a 2% potential reduction. That would put the overnight rate at 2.75% in the projected timeline, which is just over 2 years from today. So that variable rate holder that's sitting at 6 or 6.25% today would be sitting at a cool 4.25% roughly, or 4% after this is all said and done. Now that should, I think, you might disagree with me, and that's definitely not 2%. It's definitely not 1.25% where they started. But that sounds and it seems a lot more doable and palpable for a lot of people that are out there. If they said rates were going to stop at 4 or 4.25%, I think most families would feel a little bit better about those potential numbers. Remember, for every quarter point, that represents about $15 for every $100,000. That's a pretty significant difference. You think it up. So 2% reduction. That's what the market says. Now, that's what it says today. Could say something else next week. Unemployment right now. So if you've been paying attention to the news around unemployment, those numbers have been increasing or inclining, and that's not good news for anybody. Let's be honest here. But with these types of cycles, it's pretty standard at these points in the business cycle, and I've witnessed it firsthand, which again, another reason you might see homeowners or potential home buyers nervous about potentially buying in this market. Another reason why we might not see real estate values go up other than some small spikes in this current climate right now. Continuing on, the BOC itself has already hinted at additional rate cuts. So they've already come out and said, you know what? We are going to cut rates. It is going to happen. It's inevitable. It's a matter of what. Now, they didn't physically say that, but more or less, if you read the reports, read between the lines, they suggested it. There is a reason that these projections are in place. And so with that happening, and with the potential of rates coming down, this time and next time, well, you've got two conflicting sides. One, you've got unemployment, and you've got businesses investing less money in their businesses, concerned about the potential money that they have to hire, less hiring going on, more unemployment happening, as I mentioned already. Well, we're now entering, obviously, we're past recessionary measures, as most people know, but we are now at a point where not only has the rate cycle occurred and gone past, but we're now, depending on where you stand, the Bank of Canada might be now looking at catching up to the marketplace. Interesting thoughts. Out of the indicators, okay, out of the indicators that the BOC really focused on, which is excess supply, inflation expectations, corporate pricing, right, businesses, most of them are heading, so 3 out of 4 of them are heading in the right direction. The only one that's not is wage growth. And as a business owner myself with multiple fantastic employees, I would agree with that sentiment. We're not seeing wage growth or wage demand significantly change, maybe slightly. We're not seeing the extremes that we did in 2021 and 2022, where it was difficult to catch up with, but certainly we are seeing things slow down. And I'm seeing that from my existing client base right now. I mean, I see, mortgage applications on a daily basis. I get to see different income sources. I get to see what people do. And, during 2021 to 2023, it was insane. I was seeing people go up from 60,000 to 80,000, from 80 to 120, from 120 to 180. It was wild to see incomes increasing. And while we're still seeing it, I would argue that it's dramatically less than it was before. It's kind of like the baseline of where wages were before has gone up. And again, this is anecdotal. Like, I'm saying this based on what I'm seeing on a regular basis, but like the baseline's moved up, and of course the high end will always stay relatively high in the marketplace, but the kind of middle ground place, I haven't seen a lot of wiggle room in the better part of the last few months. I mean, I'm not seeing firefighters and policemen coming in with, every single year with, $200,000 years. Crazy enough, we were seeing those for a while. They're still can be high with overtime, but they're not like they were before. Some other facts, right? Even with the BOC's estimated, so that with the Bank of Canada's estimated neutral rate, right, like 2.75, we're still 2% above that right now. So we're like way above the potential neutral rate. So there's a lot of reason to suggest that we are going to see things come down and come down quicker than was originally expected. Obviously, again, expectations are otherwise with some places, depends on who you talk to. But I think there's a big reason that we could see the Bank of Canada start to really ratchet things in. And that's something that we're seeing every single day right now. Renewals, mortgage renewals. I'm getting applications. I'm getting phone calls, emails, texts from people every single day right now. My mortgage renewal is coming up. I'm not really sure what to do. What are my options? My payments are much higher. What do I do? Well, it's only 2024. That means this is mostly people from 2019. Tons of them. What happens when we hit 25, 26, and 27? All those people in 2026, that's a big one. Best believe the POC is hyper aware of the fact that there will be an impact to those people. And another reason that we will see things come down by that timeline, right? 2% above, rates coming down, people don't have any money to spend when they're renewing. They, even if it's only $500 a month, that's a pretty significant amount of money that they don't have available to spend on other things. And this is obviously going to have an impact on the economy in just 24 months. It's going to be huge. Remember this. Last consideration. When inflation goes up, obviously we know it comes back down. It typically comes back down at a similar trajectory. Now, there's no guarantees on that. History has proven that history is not guaranteed, and we know that there's crazy things that could happen. Really, there is a lot to consider here. And, kind of to bring things back to center about the housing market and money and where people stand, and even myself here. Like, there's a psychology to be considered when it comes to all this. I mean, in this podcast, we've kind of got pretty hyper-focused on the economics of real estate and, what's happening. And that's not the intention. That's not the intention. The intention is to focus things down on what the real impact is to the people that we talk to on a regular basis. All of these things create this high level of uncertainty. I watched a YouTube video the other day. And the YouTube video was by a local Vancouver real estate agent, and he was talking about the 10 different changes that the government has made, taxes, guidelines, and with the BOC and all this stuff going on. Yet people are still buying and selling. People are dying, they're having babies, they're getting married, there's things happening. You're not going to delay the inevitable. Sure, you'll chop some stuff off the top. You'll have some people that were speculating or waiting, and those people might do it, but you're not going to be able to delay the inevitable for too long. All this is really doing at this point right now is just impacting people's decisions from a perspective of confidence in the marketplace, which does have a real impact. It does. But it really just ends up bottling it up and it explodes again later. So for all those people that are saying, well, the market's going to collapse, I don't know, maybe it does. But what does collapse mean? Do house prices go down 5 or 10%? Well, they already have. 15%? Done that. From the mean? Hard to say. Look at a map and look at where real estate values were in 2019 to today. We're still up. 2020 to today, we're still up. 2021, depends where you were. 2022, maybe not. But at the end of the day, without going off on this rant right here, if the BOC reduces rates a quarter point, chances are it will inject a small amount of positivity, no notable difference. But the mindset of what the Bank of Canada actually comes out, what Tiflin says, well, what he actually says, not the mindset, what he says will impact the mindset of Canadians and it will have an impact on what they do. Bringing things back to earth right here. Let's bring things back to earth. Homeowners, again, that article, homeowners delaying moving due to the high cost of living based on that survey. They're planning to stay in their homes for at least the next year. The survey indicated itself. You can go on, it's an Angus Reid and Finance It Canada report. They indicated that 94% have no plan to move right now, right? But they do have a plan to move in the year. A quarter of them said they do plan to move in the next year. Many are intending to renovate their homes, and a lot of them will stay where they are at this time right now. But there are still a lot of people who do plan on making that move. They're just saying not now, just not yet. So, 1 year, 2 years from now, if things change, that's when we'll likely see it happen. The other article itself, asking people what's more important, interest rates or purchase price. Well, most of them said purchase price this time right now. So, you would argue that if purchase prices remain where they are right now and interest cuts are on the horizon, well, even though the market might have a muted reaction, you'll see that bottleneck happen. And when house prices start to pick back up, people will come back in the marketplace. So the reality is, what should you do right now? Well, if you're a homeowner and you don't need to move, what's the purpose in moving if you don't have to move at this point right now? You probably don't need to. Like we did see in 2021, people were just moving because it was cheap or because the cost of borrowing was cheap. But if you're someone who's invested in the marketplace and you want to take advantage of any market, this is probably the one market that you would want to, I don't want to use the word take advantage of, but invest into, because chances are 2 years, 3 years, 4 years from now, you'll see those returns. I think the game has changed, though. I think the trajectory for real estate as an investment is back to the typical long-term play. Obviously, a lot of that depends on the building and what happens there. Obviously, construction and what's going on that end of things. But I think we're back to square one as far as just real estate being a good long-term play, which is great in my eyes and great for anyone else. So back on track. What's the Bank of Canada going to do Wednesday? We'll see. If you believe everybody else or you believe the economists, you believe predictions, then it's a quarter point drop. If you believe the people that are on one end of the spectrum, then nothing. And if you believe people that are on the other end of the spectrum, we could see a half point drop. Lots of stuff could happen between here and there. We'll find out, and we'll have a podcast drop right afterwards. I'm excited for the next couple episodes. And if you're enjoying these episodes, please make sure to give me a review. Leave some comments below. Positive is welcome. Constructive feedback is fine. Totally okay with that. And if you want to hang on a little bit more, go ahead and follow us on Flow Mortgage Co. or The Mortgage Plug on Instagram. I'll see you next time.
That was an unreal episode of The Flow. I hope you enjoyed it as much as I did on my side right here. If you haven't already done so, make sure to check out all of the incredible resources that we have available. You can find us on Instagram at Flow Mortgage Co. You can find us on our website, getflowmortgage.ca. And of course, don't forget our free first-time homebuyer masterclass that's currently available on our website for anyone who listens to the episodes. And if you loved what you listened here today, the only thing that we ask for is to share this with someone else that you think this could help. And hey, maybe leave us a great review online.